And today is July 11th, 2019, and we're gonna take a look at the markets. As always, don't forget to say hello in the chat box. It's always nice. I do know we are having some issues, but hopefully we should be okay. Sometimes it doesn't work, and I'm sorry about that. But let's begin. And there's some interesting stuff going on in the markets yesterday. Uh, as you know, the market soared strongly, and that's always good. Obviously, depending on how you position. So I was positioned for long gold and long stock markets. So for me, it was a good day yesterday. I'm going to talk a bit more about that. By the way, we having quite a lot of activity in the page yesterday. So we have Inno, which is a new contributor that joined us, and he's been trading since 2009, and he shared and provided a bit of indicators, like a setup on the back of gold. You have also Nicholas, that provided an update on the EURUSD. So we have a lot of content coming out here. Inno usually publish contents from about 11 a.m. So make sure you join us and check out the content here. In fact, I think if you just scroll down on this page, you should be able to actually see things, but actually ignore that because there's some issue with the charts here. The charts don't actually correspond. So ignore that. Just click up here. All right, let's begin. And we're going to begin with the euro. So, very, very straightforward, right? It's not really that difficult what's going on here. So, we talked about buying here if you wanted to. Then, the comments by the head of the US Central Bank were considered as dovish, really, that they potentially open up for further, more than just one rate cut. And that caused the dollar to weaken across the board. That caused things to go upwards. And as you remember yesterday, we said if you would buy here, put a stop loss here and trade to 113, you will get a 1-to-1 risk reward ratio, which I think makes sense. In short-term situations like this, a 1-to-1 risk reward ratio makes perfect sense. The idea, of course, you need to really make sure you have your entry on point. If you don't have your entry on point, the likelihood that you're going to succeed is it's not going to be very good. As for GBP versus the USD, unfortunately, that bearish outlook I shared with you guys did not work out. We're very, very close. I think we already touched. Yes, we just traded above the July 8 high. So the idea was, that the market turned bearish here, and then be bearish with a stop just above this high here from July 8. I was actually short myself on the day. I shorted, actually had a limit order to short, so I actually got entered at 24.45 here. But then I actually closed this out at, I think it was 24.55, 24.60, just after like an hour or so, just because I didn't feel comfortable shorting here, and I was looking at price action, and it was telling me that we're probably gonna head upwards. And yesterday, when I was looking at this, very, very interested to short sell, but I didn't. I ignored this one and just continue to trade the markets that I know, not that I know better, but that I understand better right now, which just happens to be gold and stock markets. So I have no trade here on, no nothing. This obviously is looks to trade a little bit higher, but I wouldn't be deceived, not at all. I do understand that the situation in the US is not that good. They're gonna cut rates most likely. But I still think that eventually this will go lower. I think it just needs a steeper correction. Maybe 126, I think that would not be unsurprising. Between 126 and 126.50, which is up here, I think people will try to short sell. And then from here, probably target lower levels. It just needs a bit of a correction, I think. As for the dollar yen, unfortunately, it did trade below that trend defining level, which was here. The market is now sort of back testing support, really. You still have a bit of an uptrend, and I want to stick with that. It's not that I want to stick with that, but it has that bullish momentum there. So if you wanted to, it is possible to pick up some dollars here versus the Japanese yen. However, though, it's not really like a clear-cut case. It's not like a solid, perfect setup. So to my clients, I literally been telling them that just ignore this. As for gold, now this is something I am holding. As you know, I was talking about it here in these free webinars on the break to the upside here. I said, you know, take out this level 1364 and we can rally to 1600. I'm still sticking with that view. And I bought, because the breakout, as you know, happened in the middle of the night, and I tried to ignore to put any positions on outside of London hours. And so I actually bought, but I bought on these corrections here. So I'm still long. And yesterday you had that little push to the upside. And I would say that as long as you trade above this level now, that will be the new trend defining level. That will be 1385.87. And you know, treat this as a range which I think we're gonna break to the upside because of the overriding bullish pattern, and as well you have that rate cuts. If you're not already long though, you probably need a bit of a pullback, right? Because if this continues to trade sideways, then yeah, we can probably go down. I think, you know, watch this high. This is 1407, so around 1411, 1407. I think people are gonna be buying. Would be surprised if we trade much lower than 1400. Sorry. And as long as we're about 1385, I think we're gonna be bullish. And this as well, you know, this could be treated like some sort of a rectangle, which gives you this target. So I think if we start to trade above here, I think we probably see more gains going forward. As for crude oil prices, you know, it's not that difficult. Check this out. Iranian boats try to intercept British tanker. You know, it's quite clear here. And then now it's not just the Americans that are having beef with the Iranians. As you know, the EU has done very much to try to figure things out with Iran, to sort of still be able to help them somehow. You know, France, I think, and even Germany have a large economic interest in Iran. But now you have the UK. You know, this is on the front page of the BBC, right? Looks like a scary thing here. Crude oil prices going upwards when you now have US and UK sort of pretty much I'm not saying the UK is going to be doing too much, but I'm saying both at least now sort of acknowledging that this is not really working out and things could easily spiral out of control. So that, I think, will continue to remain provide pressure on gold prices to go upwards. And as you know, the general idea a few days ago was to abandon that bearish view. I said, look to be bearish from here. I said, abandon that view. And it just looked to be bearish below a break to 57.25. Now this market has clearly rallied upwards. And, you know, if we go long here, I think this can go up. You know, just because of this, right? That could easily be something that drives markets upwards. But if you didn't buy it, then, you know, it's too late. There's literally just been one really good opportunity here, and it was this one here for the loss since June. That was the break here to the upside. And then I guess you could have scalped a bit here, but otherwise that didn't really work out too much, did it? And this again is not really a very good opportunity. But if it goes down, then I think. So if it goes down a bit, that's fine. And I think trading wise, so the level to invalidate that outlook is 57.25. Now this is the good stuff. The S&P not moving that fast, but it's definitely moving upwards. So the first idea was to buy here. You know, we actually had several buy ideas, but this was one. We also talked about the breakout here already. So what I've done now, you know, stop losses were much lower, and now it's pretty much here at the weekly low. So we can cover that, reduce that risk. And I think, as I said many times before, this is not necessarily the best. Actually, it's not even bad. It's okay. Look at this. This is a nice, healthy, relatively healthy head and shoulders pattern. This market is trading sideways. Remember that. Sideways for 1.5 years. So it has a bit to catch up with. After a move like this, it will trade sideways. But eventually, when it breaks, it will usually trade higher or lower, depending on the breakout. Here's another one, which is really good. And this is just in 2000 and from October 2014 up until July 2014, this market was trading sideways. Eventually, of course, it traded upwards on the back of Donald Trump, and then the whole thing just rallied and rallied and rallied, rallied. Are we going to have the same here? Well, it would not surprise me. Here's another example, and this happens as well. It's not always like great times to be trading stocks, but this is the S&P 500, and you can see sideways from the year 2000 up until the year 2013. But then you have this massive rectangle, and the price broke, and we got 1 times the risk, and we could potentially still be getting more, and this will be 2 times this range. And what's going to happen at one point is that it's going to turn really boring again. So after this bonanza, because this is a bonanza, after this finishes, we're probably going to head into trading sideways at one point. But for now, it's bringing upwards, so I'm going to continue to be bullish. As for the German DAX, it's looking interesting as well. We don't necessarily have like a very, very strong, we don't have a necessarily a particular pattern to work with here. At least not a fresh pattern. So you might remember this pattern here, which was that head and shoulders. We had several head and shoulders. I highlighted this head and shoulders here, and in this presentation as well I highlighted this head and shoulders here, and that head and shoulders is still in play. And you see the difference here is about 1278 points, and that gives you like a target like this one, which just happens to be around this level here, so we can reduce it to this level here, right? So that's sort of a target to work with longer run, and in the short term we're just dealing with a little uptrend here. Now I know some of the data is bad, and I know we could have recession this time next year, but I'm not going to be fighting with the market. I'm going to try to rally to work with this as much as possible. So as I said yesterday, we're trading up here, so this was the buy zone. So you can see the market sort of slid all the way down to the buy zone, stabilized, moved down again, go up and go down here. It might not work out, okay? It might not work out, but I think as long as you trade above something like 12,600 and 12,263, then this is a interesting little zone, right? So if I would be buying now, you have a reward of 2.43. What's also interesting here is that probably needs to catch up a bit with US stock markets. Now, on the break to this level here, which is 12,454, I can't read today, 12,489, take that level out, and then you will have on the 1 hour 30 minute, you'll have a nice, like a triple bottom, if not yeah, 4 lows really, 1, 2, 3, 4, when and if, because it's always these ifs, right? And the general idea here with reward just like this is that you can do this, and you can literally do, if you do this, my brain is somewhere else today, you can do this about 2.43 times. If you on the next round get it right, you'll cover all the losses. Does that make sense? Because we're risking about 1% to make 2.43%. So if we win here, we'll have enough money to open up 2.43 similar trades like this. At the same time, if this does not work out, and the next one does not work out, and then the third one work out, well, then we're gonna be ahead, right? So we're gonna be ahead with about 86 basis points at that point, and that's what's matter, because the same way as the market sort of goes up and down, up and down, up and down, up and down, that's really how our equity curve is gonna be. And sometimes what happens though is that you have, much like the markets, you have these steeper pullbacks in your equity account, and that of course is no fun, but that's part of what the markets are. Because if a strategy always worked, then that strategy would quickly be exploited. I mean, this is quite cool actually. Like, I'm a trend following breakout, I'm a breakout trend following guy, and trading breakouts this year has been terrible, really. Hasn't been terrible, it hasn't just been good. But I know that every second year or so, I have amazing results, and that will compensate for like a slightly sluggish year. And then again, if I flip it around and say, what if I didn't trade trends like breakouts? Like this year, for example, I'm down, I think, about 12% this year. Well, what if I did the total opposite? What if I, when you have a breakout, like in GBPUSD, what if I did like these guys here? You have the breakout and then you buy. Imagine doing that for 7 months and you're up with 15%. It's not that great if you compare with the fact that last year with the breakout system I was up with 39%, and before that I was up with about 124%. And before that, in 2016, I was down with 22, and in 2015 I was up with 18.5, and in 2014, well, I don't remember how much I was up that year, but I think about 30% or something like that. Let's figure that out. $34.2%. So this is my results. And for this year, for now, I am minus 12-13%. So this is what you will be getting if you were doing the total opposite. Try to go against the trend. And this, again, is all about the risk-reward ratio. Imagine if I change my strategy and say, well, I'm not going to trade with breakouts. I'm going to do this going forward. Well, is this better than this? No, it's not. In fact, I know as a trend follower, I just need to get it right once or twice a year, ideally more than that, to make some decent money. And this could easily be -5 or even 0. Okay, guys, we're going to wrap things up. If you have any questions to me, you want to be added to my distribution list as well, I have a free WhatsApp distribution list. Just ping me up, send me a message via this phone number, and I will add you. It goes via WhatsApp. If you don't want any messages, just send me a message, stop, and I'll remove you from the list. It's free to join, very easy. So, got a question here, by the way, from Mark. How you doing, Mark? I hope you're doing well. Joining us all the way from the United States. And then we have Marvin, based in the UK. Good morning to you, sir, as well. Guys, so let's begin here with our first question then. So, dollar Swissy. And the other question, did Powell kill the dollar? Well, the dollar is not really gaining very much, right? And it's a bit tricky, right? It's tricky because I think what's going to happen here is that if the US data continues to be good, then obviously they're not going to cut as aggressively, and then the dollar is going to gain. But I know in general, once you start to get bad data coming out, and you know, and the Fed sort of starts cutting interest rates, you will usually have economic contraction in the US. So I think for now the dollar will continue to soften, but it's unfortunately very headline driven. So you get good NFP, everybody buys dollars. You got comments, everybody sells dollars. So it really is aggressive moves both ways. As for the dollar versus the Swissy, so this is a bit tricky, I think, but we're trading within a overall bullish trend, right? So you have 96 being support, and you know, maybe if you wanted to, you could buy here and then target the upside. Depends on if you think that they're gonna cut rates more. And then you have this, which I think is probably the easier, because you can treat this like a double bottom, and you could potentially sort of, when you take out this level, most likely people that did buy here, they're all gonna get a bit panicky, and they're gonna try to sell here. So they're gonna push price lower. So that's, I think, is the easier trade. And then this other stuff, which is gold, which is even easier, I think. Okay, guys, so we're gonna wrap things up. I want to thank you so much, Mark and Marvin. Thank you so much for joining me in the chat box this morning, and thank you for your continued support. I see you guys like my videos and comments. Mark, I know you for years. Marvin as well. So guys, thanks so much, and thanks for everybody else that is watching. Click on that little button, and it's gonna load you the YouTube page. And don't forget to just hit that like button. Have a great day, guys, and happy trading. Bye-bye.